Good morning, everyone. Today we are going to present LKAS 36 Impairment of Assets. Before we are talking about LKAS 36 Impairment of Assets, we would like to talk about what is assessed. So, assess is a resource controlled by an entity arising from past events and expected to yield future economic benefits. It forms the foundation of financial reporting and derives value creation. In the world, there are many ways to divide it assets, but mainly we can talk about two ways. The first way is according to accounting standards. So, according to accounting standards, the main 2 points are non-current assets, which means fixed assets and current assets. So, what is non-current assets? Non-current assets are assets which give, it means which provide benefits more than 1 year. Example, land, buildings, patents, goodwill, long-term investments. So, deeply, when we talk about it as example, think about a school. Image. The school was built before many years, but still every student can take advantages, it means benefits, even today. Think that was built past events and also even today also give benefits. The second thing is current assets. These are assets we can get benefits within 1 year or business normal operating cycle, this means operating cycle. Cash and cash equals trade receivable, inventories. These assets we can easily convert into cash. So that is the way we can divide it according to accounting standards. And the second thing is according to nature. We can divide tangible assets, intangible assets, financial assets. What is tangible assets? Tangible assets means we can touch. We can touch that goods. And also there is a physical form. But intangible assets, it is different when we compare the tangible assets. But the thing is, the both goods we can take benefits. So intangible assets means we can't touch it, but it has value. When we talk about examples, goodwill, software, likewise. Tangible assets example means machinery, land, building, likewise. And financial assets. Financial assets, investments in shares, bonds, likewise. So I think you have a better understand the defining of what is the assets. So now I am talking about why assets is important in organization. Why assets is important in organization? Because without assets, Every organization cannot and not able to achieve their goals. Every organization, from small to larger, because they need access to give, to take benefits and earn money and profit. That is the lifeblood of every organization. Without access, they can't take it and can't achieve their goals. The main important thing is the stakeholders trust. I will talk about it recently, but now without access, they can't touch. They are like to, like every organization like to go a big competing market. Without access, they can't survive in that market. So the main role of access in organization is to support its operation and generate future economic benefits. The first thing is revenue generation. It's mean assets like machinery, buildings, or vehicles help in producing goods or delivering services. The second thing is operational efficiency. Assets improve workflow and productivity. Example, computer software likewise. The third thing is investment value. Assets hold financial value and can be sold or leased to raise funds. It means we have building, we can add the value. When we add the value, the whole value of that buildings will increase. Then we can lease it or sell it. Sometimes we take that building 2 lakhs, but after adding value, we can sell it 10 or 20 lakhs with the time taken. So the fourth thing is financial strength. A strong asset base improves an organization credit first and financial stability. Think, I earlier private limited, there are many vehicles. It's mean a lot of vehicles we can't even count. According to that vehicles and is credit first and strong assets, we can understand the financial strength of that organization. If it is larger, whether it is larger, not. And when we talk about more, it's assets support for growth. Assets enable business expansion, innovation, and long-term planning. I think you have a better understand of what is assets, how we can divide it, and why it is important to in organization. So, and according to SLFRS conceptual framework, recognition depends on control, past event, and future benefit. For instance, machinery acquired by purchase qualifies as an asset. Accurate asset recognition is critical for transparent reporting, internal decision making, and stakeholder trust. Previously, I said if we have a strong asset, if we have a good asset, if we manage assets efficiently, every organization hopes to get stakeholders trust. So accurate asset recognition is critical for is to getting stakeholders trust. So now I am moving to introduction of impairment of assets, and when to recognize impairment, nature of impairment, professional judgment required, and link to LKAS 1 benefits of timely recognition. Likewise, So every standard has object because every standard need a object. Nevertheless, that standard is there is no value. So LKS 36 also have objective. That objective of LKS 36 is to ensure that assets are not always stated in the financial statements by being carried at more than their recoverable amount, which is defined as the higher of fair value less cost of disposal and value in use. So when we talk about as a introduction or definition of LKS 36, in today's dynamic business landscape, asset value may decline due to technical disruption, market volatility, and regulatory shifts. LKS 36 impairment of assets ensures that non-financial assets are not carried at amount exceeding their recoverable amount, defined as the higher of fair value less cost to sell or value in use. That is the objective of an brief introduction of LKS 36. And I think that is not enough to talk about impairment of assets because the standard is very advanced and so more advancedly and deeply LKS 36 impairment of assets. LKS 36 sets out the principles and procedures for assessing, recognizing, and measuring the impairment of assets to ensure that they are not carried at more than their recoverable amount in financial statements. This standard applies to a wide range of non-current assets, including property, plant, and equipment, intangible assets, goodwill, and its investment, associates, and joint ventures where applicable under the standards. Impairment testing under LKS 36 is particularly significant during periods of economic uncertainty or when indicators suggest that the value of an asset may have declined. The standard ensures entities account for the economic reality of asset values, enhancing transparency and accuracy in financial reporting. Additionally, the standard requires regular impairment testing for certain assets such as goodwill and tangible assets with indefinite useful life, regardless of whether there is an indication of impairment. It also guides the reversal of impairment losses, excluding goodwill, when a specific condition